Want to make sure it's the right one. Does that look right?
That looks
Yes, ma'am.
perfect. So, okay, we'll give them another minute and we will start when you're ready.
So I won't be looking over here, which is where my camera is. I'll be looking over here. So
Okay.
That's
so
fine.
Tab profile.
just
Okay.
talking to the wall over here.
Okay.
All right. Let me see. It looks like the signing in has slowed down a little bit. I'm going to go ahead
Go ahead and start.
and all right. Today, our guest speaker is Miss Jessica LaPierre. Jessica is the claims manager at Tort Technologies for WYO claims and has been working in the flood claims industry for over 10 years. She has experience in many aspects of claims, having worked as a claims advocate, examiner, supervisor, manager, and trainer. The majority of her tenure has been spent managing claims examiners and overseeing the claims process. Jessica is originally from Massachusetts and currently lives in Kalispell, Montana with her family. Please welcome Miss Jessica LaPierre.
Hello, everyone. All right. So I guess we'll just get started. Okay. So starting with our agenda, kind of what we're going to go over today. I'm not going to read the agenda because that's rude and it's long. So, but these are the topics we're going to hit on today. That was the bio. That's me. I'm Jessica. So introduction, kind of why are we here today? So the purpose of this training is to provide insight for the types of questions and errors we see to ensure that the claims process is as smooth as possible. An accurate and complete file benefits not only the policyholder and our clients, but also ensures adherence to the standard flood insurance policy and delivery on the promise of the policy itself. So the things that we'll be going over are things that we see both on our end, you know, kind of tips and tricks, things that we're catching, things that we're seeing, and also things that come back on audits for us. The goal of the training is to provide awareness of best practices for both adjusters and examiners, both our examiners as well as your internal examiners. And this is to master the claim file and decrease the number of drafts and revisions and reviews that are necessary on as many files as we possibly can. So just in, I do have a lot of slides here, so if I'm talking really fast, I'm sorry. I just want to try to make sure we get through it all. But just for some background, just to explain, the perspective that I'm coming from is from the claims examiner from our office. So our internal claims examiners are responsible and take ownership of the claim from start to finish. So they track and follow the progress of the claim. They take the incoming calls. They follow up and act as sort of a liaison or advocate to keep the claim moving forward. And they handle the majority of the associated documents received for the claim. And they make the final determinations and issue payments when applicable, as well as drafting and sending the closing letters. So once the final is received, of course, hopefully it's been thoroughly reviewed by the adjuster on your end, as well as your examiner. And then our examiner is also going to thoroughly review that report. And they have a lot to look for, of course, and we're responsible for making accurate notes and payments and adhering to the rules and regulations of the standard flood insurance policy. So as we're going through the report, it's not just look at the photos, look at the estimate, and make sure it matches. There's, of course, all of these rating and data points in the standard flood insurance policy and the claims reports that we have to compare. And some of them may seem insignificant, but when you tally them all up, there's a lot of them. And individually, they carry substantial weight in determining coverage and eligibility for payment. So just a list of just a few of the things that we're looking for, certainly not an entirely inclusive list, but everything from the effective dates of the policy, verifying the address, making sure ownership has been documented, looking at co-insurance penalties, checking for structural damage. I mean, all of these things are things that we're looking at and verifying and comparing to the policy itself. So the life of a claims examiner, it can be long. I've been doing this for 10 years. It goes by really fast. The claims process does not always end, of course, as you all know, when the initial claim is closed. The life cycle can take a few hours if it's a CWAP and it's withdrawn by the policyholder a couple hours after they file it, or it can take a few years. Think Hurricane Sandy and the Sandy Task Force. After the claim is closed, there can be follow-up calls, re-inspections, requests for additional payments, requests to void and reissue checks, appeals, litigation, on and on it goes. So This is kind of what we look like before, you know, we're young and we're hopeful. And then after, for anybody who's seen Star Wars, that's what we look like. And when you've been doing it for too long, you look like that. I got Dwayne's permission to put that in there.
I was gonna say, does he know that the photo's there?
It was actually his suggestion to put it in there.
But I gotta tell you this, that looks like a young Dwayne. I mean, he looks young and
Actually, that picture's only like a week old.
really, he ages well. He doesn't look like Darth Vader.
But yeah, just a little joke. So that's kind of, again, the perspective that I'm coming from here. These are the things that we kind of find. So they seem simple, almost even repetitive for anybody who's recently gone through the adjuster training class, yet we're still seeing them. So we're still going to go over them and talk about them. So starting with the preliminary reports, so from assignment to prelim, we're going to kind of follow that timeline for the life cycle of a claim. So the most important step after the claim is assigned to the adjusting firm, to CNC, of course, is that prompt contact with the policyholder. In a lot of places in this slide deck, we're going to be just referencing what the manual states. And of course, the manual states that in most circumstances, the adjuster must contact the policyholder within 24 to 48 hours. Or, you know, for anybody that was around during Sandy, we started there, then we went on to 72 hours, then we said within 5 days, and then we gave up and just said Sunday, right? So from the point of assignment to preliminary report, if for some reason that inspection is going to be delayed, like the policyholder can't be reached, the building isn't accessible, the policyholder's out of the country, it's really important to provide an interim status report to let us know that as quickly as possible. And the manual also states that as well. If it can't be inspected within a reasonable time frame, we should get a prompt status report explaining why. And provide those details. Is it the policyholder can't be reached? Is it the building's not accessible? If the inspection's not scheduled soon, is it scheduled? And if so, on what day? This is particularly important if it's the policyholder that can't be reached. That should prompt our internal examiner to contact the agent, call the policyholder, and start looking to see if maybe we have bad contact information and what do we need to do to get that policyholder contacted. So the preliminary report itself, this seems again like refresher. These are things everyone knows, but we want to kind of draw attention to the fact that we obviously want it to be timely, accurate, including prompt notification of any claims adjusting, underwriting, or covered issues. And again, that's potential issues as well as known issues. Of course, we want it to include adequate photos. Clearly indicate this is something that's new, so we want to call it out because sometimes we can't tell. We need the prelim to clearly indicate whether or not it was a virtual inspection or an on-site inspection. We have to enter that data once we receive the prelim and report that back to FEMA. And sometimes we can't really tell. Of course, include a current copy of the adjuster's FCN card. So common things that we see on the preliminary reports that require us to send it back sometimes is reserves that don't seem to be accurate or they're not consistent with the photos. Missing FCN cards or expired FCN cards. A yes indicated for advance payment and there's no advance payment request received. Sometimes that's just the two ships crossing in the night. We just haven't seen it yet and it hasn't been uploaded. Conflicting information within the preliminary report itself. The most common example of that is when it's indicated no for GCF, but the reserves are over $0 and there are interior and exterior water lines. This is the most common example we see of that. It's no for GCF, but for some reason there's a need to put in that penny for the reserve. There's no GCF, there isn't even a penny for reserve. So you don't need to put in the penny. If it's no, then it's $0. Yeah. So post-inspection considerations. This is special handling that's necessary on common things that we see with the preliminary report coming in at that time. Of course, advance payments would be number one. Non-waivers, prior loss requests, underwriting alerts, and expert requests. These are the most common that we see either coming in tandem with the preliminary report or coming as a separate upload, but at the same time. So advance payments, of course, the manual gives a ton of detail on advances. We're just focusing on the primary type of advance. There's other types of advances like pre-inspection and special advances that can be given for more than 50% of the reserves. But let's focus on this, the standard advance payment. So of course, FEMA encourages advance payments, and of course, they actually require the advance payment to be specifically addressed in the claim file. Was it offered? If it wasn't offered, why wasn't it offered? And if it was offered but not accepted, why did the policyholder not want an advance? That actually has to be clearly stated in the narrative on every final report. It comes across in an audit finding every single time, especially with high reserves, if there's no reference to why there was no advance payment issued. So quoting the policy here, of course, this is a post-inspection advance. This is the most common type of advance. I won't focus on the other kinds because it would take too long. But of course, you can always look it up in the manual. 25% is what's standard for a post-inspection advance, no more than 25% of the reserves. It's actually a common reason that we return advances because they're more than 25% of the reserves. The other most common reason to return an advance is the photos do not support it, typically with contents. So for commercial policies, I kind of already said number one here, but number two, for commercial policies, ownership, insurable interest, as well as other insurance must be documented first before we can consider an advance payment. Farther along in this training, we have a much longer segment on ownership and other insurance and insurable interest, and we'll go over that in a little bit more detail later. But it's very important that the second the claim is assigned and the second that inspection takes place with commercial policies, that we start gathering that documentation, rather the adjuster starts gathering that documentation. No payments can be issued until that is sorted out, properly documented, identified, and resolved. And again, number three, the photos in the preliminary report need to support the advance requested. And at this stage, it's very important to verify the mailing address and the lien holder. Of course, the advance payment request form itself indicates where the policyholder wants their check mailed, so we want to make sure that that's correct, especially if it differs from what we have on file. And verifying the lien holder. Verifying the lien holder can be as simple as, if the flood loss questionnaire has been completed by the policyholder, please include a copy of that in either the prelim or the advance payment request, because that's where the policyholder would have verified that. Non-waivers, more frequent than we think sometimes. We're going to touch on it because typically when we get them, they're not quite filled out the way that we want them to be. So the claims manual does provide guidance on the use of non-waivers and when a non-waiver is necessary. They're actually necessary fairly frequently. The adjuster should secure a non-waiver by the policyholder for late reports or when the adjuster identifies a potential coverage issue. So examples of when that might occur: late reported claims every time, tentative or provisionally rated policies, multiple buildings but only one policy. That one doesn't come up very often, but of course it's a big deal when it does. Property address discrepancies, and those are just examples. So the purpose of the non-waiver is not just to have the policyholder sign it, I signed a non-waiver, but the policyholder should actually be providing an explanation whenever applicable, particularly for late reporting. So from the policy regarding timely notice of a loss, if the policyholder is filing their claim late, the adjuster should document the reason for the delay, and the adjuster should execute a non-waiver agreement when there is a delay. It should include the reason for the non-waiver and the policyholder's explanation for the delay. What we normally see is that, for example, they just write in the word late reported. We already know that. What we're actually looking for here is the reason for the late reporting. Just tell me a quick story. This is typically filled out by the policyholder themselves. What was the reason for the late reporting? I filed it with my homeowners first on accident, didn't realize I had a flood policy, I was out of the country, whatever the case may be, because we're actually going to need that to request the waiver from FEMA. So if we can have that explanation up front, that's certainly helpful, and it helps us in our communication with the policyholder as well if we know what the reason is. If we take the notice of loss from the policyholder and we're actually the one on the phone with them, not say the agent reporting the claim online, we do try to get that answer, what is the reason for the late reporting, and put it on the assignment sheet as notes for the adjuster. But a lot of our claims are reported online by agents and policyholders, so we don't always have that opportunity. So prior loss requests. When requesting a prior loss, really it's just a matter of please include as much information as possible. If we have the prior loss and we can see it, I mean, that's one thing, but a lot of times we get requests that are a little vague. So something would have prompted the request for a prior loss. What was it? How did it come up in conversation? How did you discover that there was the prior loss? So if you know it, provide the date of loss, the name of the insurance carrier, payments if known. Please bear in mind if the prior loss is over 7 years old, it is highly unlikely that that prior loss will be available anymore, particularly if it's with, if it's switched insurance companies, if it was with a different carrier. If we were the servicer, we might have it. 7 to 10 years old, we may not. Asking for a prior that's over 7 years old, again, it's less likely that they become available. So this is their actual examples of prior loss requests. Example 1, please provide the prior loss. That really doesn't give us a ton of information. Example 2, the policyholder states they had a prior loss in 2016 in which they were paid for building damages, and they do not remember the exact date or name of the insurance company. Well, that gives us a little bit to go on. We know why it's being asked for. We have a rough idea of when, what they got paid for, and why we don't have a specific date or specific insurance company. Underwriting alerts. Lots of these. Underwriting alerts should be submitted as soon as possible following the inspection. Discrepancies to the building type should be accompanied by adequate photo and other supporting documentation. So changing the rating on the policy from, oh, it was rated as this and now it's rated as that. I mean, that should be well documented with photos. We like to see tape measures outside of the building, measuring particularly with basements and subgrade crawl spaces and things like that. So in this example, if the adjuster has noted the insured building is rated as having a slab foundation and it's actually a basement, we need photos to incontrovertibly document that. Going from a slab to a basement, of course, we're dealing with completely different options as far as limitations on coverage in the basement area. Could have a significant impact on premium. So we need to have clear photos. Again, tape measures, interior, exterior, really showing us that so that we can forward that on for reformation and get that addressed. We're just going to touch on principal residence just real quick. So for claims purposes, principal residence is defined as 80% or more of the preceding year. So looking backwards at what has actually occurred versus when the policy is written, you're looking forward. What is the policyholder's intention for this dwelling? If the policy, when you get the flood claim assignment, if it's showing as rated as a secondary residence at the time of loss, but you discover it actually as a principal residence, we can't just change it. We have to actually get supporting documentation to make that change so the policyholder could potentially be eligible for recoverable depreciation. The flood manual actually states what documentation is acceptable to change a policy to principal residence. It includes a driver's license. That's the one we see the most, of course, but just so you know, we do have other options. Automobile registration, proof of insurance for a vehicle, voter registration card, documentation showing where children attend school, or the homestead tax credit for primary residence. Getting this information to us as quickly as possible. It's best to do it at prelim time because we do have to reform the policy and that can take time. So the idea is to hopefully have it done prior to issuing of any payments because that can delay the claim. So we're bringing it up here in the slide deck because of course it happens. It actually happens frequently that the policy wasn't rated it was not rated as a principal residence. We want to get that corrected and we want to do that before it comes time to issue payments so there are no delays. So updates to mortgage holders. Removal of a lien holder requires supporting documentation. I don't know if anybody's aware of how low the interest rates have been in the country for the last year or two, but a lot of folks have been refinancing. So mortgage companies are changing all the time. I personally have owned my home for 6 years. I think I've had 4 different mortgage companies in that time. So policyholders don't always update their flood insurance policy and we don't find out till claim time. Mortgagees have changed or they have been paid off. The mortgage clause in the standard flood insurance policy is very specific. And it does create a responsibility for us to make sure that any named insured, which includes a mortgage company, is listed on any checks and not removed unless we have a paper trail, proper documentation to support that. This is extremely common, and it is an extremely common delay on claims when we don't have the right mortgage information. So again, anything that we can get up front as quickly as possible, like at the prelim versus waiting till the final, or discovering this at the final, and then we have to request documentation. So if the mortgage information is not correct, particularly if they're advising us that a loan has been paid off, we do need documentation to support the removal of that lien holder in order to take them off the check. Expert requests. So we're going to talk about engineers real quick. So the manual certainly gives a lot of detail on this, but the adjusters want to be on the lookout during their inspection for signs and issues of concern pointed. So things that the adjuster observed themselves, as well as things pointed out by the policyholder for possible structural damage. The manual does provide a table, and it lists exterior, interior, and general indications that an engineer may be warranted. And that includes signs of cracking or foundation movement, displacement of exterior walls, floors that are cracked or separated, uneven, out of level, not plumb, evidence of moisture leaks or hydrostatic pressure, etc. So this is an excerpt from the claims manual, of course. We want to be requesting a structural evaluation when the cause of damage is uncertain, the extent of the damage is unknown, to discern the cost-effective method of repair, and when the policyholder potentially contests the recommended loss settlement due to structural issues or concerns. So more information, certainly a lot more in-depth information in the claims manual, but sometimes when we're reviewing a final report or in our conversations with the policyholder, these things are brought up. They weren't necessarily brought up on the claim file, so we want to make sure that we're noticing those and addressing those. Because if we wait until the policyholder calls, a year later, and maybe they've already done the repairs, it's a lot harder to verify what the covered damages are at that point. CPAs and salvers. It's important to note, so of course, typically these only come up on commercial policies. For CPAs and salvers, we have to document ownership of the contents first. It is not uncommon for us to, well, actually, it's uncommon, but it has happened in the past where we've gone down through the process of engaging one or the other, and they're both expensive potentially, CPAs in particular. We've engaged a CPA, we've gone through the whole process, and then come to find out the policyholder has no insurable interest in the contents. So we don't like to find that out. So we definitely want to make sure that we first verify ownership of the contents. Requests should include adequate photo documentation, reserves, and descriptions of the items being claimed to support the need to hire the CPA or salver. It is not the CPA or salver's responsibility to document the claim or write the estimate. Experts are engaged to assist with the claim process and support the estimates and inventory. They're not taking over the claim. There's still an adjuster fee, and the adjuster still gets that, not the CPA or salver. So there are some post-inspection claim issues. These are things that come up which are much more serious than others and require additional special handling. So those are things like property address discrepancies, loan closing, tentative and provisionally rated policies, policy form changes, and flood in progress. We're going to take a quick look at each one of those. Once again, the NFIP Claims Manual provides guidelines regarding changes to a property address. It is very specific and outlines required documentation. It also differentiates the types of property address discrepancies. There's application agent typographical errors. There's carrier or processing typographical errors. Maybe everything was right on the application, but when we were keying it in, maybe we got it wrong. 911 USPS changes. And then it's just wrong. And those are scary. But it is important to be familiar with the guidelines provided in the claims manual for these situations. This could be a whole separate training by itself, so we're not going to go in detail beyond. Be familiar with the guidelines in the claims manual for these when they come up, and luckily they're rare. We have to proceed with caution and be very careful about issuing any payments until this is resolved. So loan closing, hopefully doesn't come up as often, but just as a refresher, when a policy is written, the agent can indicate that, or actually not even just when a policy is written, but also when coverage is changed or increased, the agent can indicate if the endorsement or the new policy is due to a loan closing, thereby waiving the 30-day wait on the policy. The flood manual states that initially, the insurance company can rely on the agent's statement that there is no waiting period due to a loan closing. However, if a claim is filed during those first 30 days of what would have been the waiting period, now we need to actually verify that that loan closing took place before we can move forward on the claim. So it says 30 days. We actually make our window 45 days because the closing dates as represented on the application may be off a little bit. And that gives us a buffer based on cash receipt date and application sign date. So when we're looking at these, if it's a new policy, first term policy, and the date of loss is within 45 days of the inception date, and the policy was issued without a 30-day wait due to loan closing, we do have to have verification of the loan closing. So that's part of the documentation the adjuster would need to be gathering to document the claim is a copy of those loss settlement papers or loan closing documents. Once again, this is a scenario where we cannot move forward with the claim. We can't issue advances. We can't issue payment until this is resolved. Same with tentative or provisionally rated policies, luckily very rare. We have maybe just a couple open right now, but policies issued with tentative or provisional rates must be actuarially rated prior to any claim payments. So we want the adjusters to be aware of that. It does show up on our assignment sheets. You can see it on this page right here. You'll see both the new policy as well as under special instructions. It will say that the policy was rated using provisional or tentative rates. Please get a non-waiver. So number one, it's important that we still proceed with the inspection because we still want that to be timely, but that's communicated to the policyholder, and that the adjuster also knows that, you know, we can't do anything on this claim as far as issuing beyond the inspection. We still want to inspect and we want to get that non-waiver, but we can't issue any payments or advances or anything until that is resolved. The documentation to actuarially rate the policy can vary from situation to situation. We do ask that the adjuster, as part of their investigation, is assisting in gathering the necessary documents for rating. Missing documents are typically things like photos and elevation certificates. If the adjuster is unsure what the outstanding documents are, they can certainly reach out to the claims department to get those details. Now, our internal procedure, of course, is to flag these and to notify the adjusting firm when these happen. We send out a reservation of rights letter and we communicate what the missing documents are. But if it's super busy, we may not catch them. So it's kind of a dual safety net there, both the adjuster working towards it as well as us working towards it to ensure that smooth process for the policyholder. Policy form changes. If the underwriting issue alert involves a policy form change, and this is going from one policy form to the other, little diagram there for you, dwelling to GP, RC to dwelling, et cetera, prompt notification of the discrepancy is necessary. In some cases, the premium change can can either be a significant refund, it can be, or significant premium due. So really any underwriting issue, not limited to just these, that results in a change in premium could potentially delay the claim. So anytime we have something where the policy is rated one way and the facts say that it appears to be something else, we need to be notified about those as soon as possible, because in most cases, or in a lot of cases, we do have to wait to determine what the premium will be, make sure we don't have a shortfall there, and be cautious in proceeding with those. So the sooner we are notified, the better. Flood in progress. This could be a whole section all by itself also. I'm going to touch on the facts. So on every file, the adjuster should verify the general condition of flood, of course. They should confirm the date of loss that is reported, confirm that the date is accurate, and determine when that flooding event started. Ask the policyholder questions and include specific details in the narrative. So a lot of times the policyholder, of course, in your conversations, they're going to be telling you, oh, this is when it started, or this is what we've done. They're going to be the ones kind of giving the most information to help us answer these questions. This should all be very, very specifically related to us in the narrative. If you have, as an adjuster or an examiner, any questions or concerns on a particular file relative to flood in progress, I would recommend that you reach out to the management at CNC. And of course, they will reach out to us, or myself in particular, for issues surrounding this particular topic. All right, so from the preliminary report to final report, moving along in the life cycle of a claim, sort of that claims purgatory, if you will, of waiting for the final. And that can be a couple of days, it can be a couple of weeks, it really depends on the claim. So, of course, the important thing here in this interim period is status reports. So we do have a minimum requirement of at least 30 days in between the prelim to the next status or the final reports, but that doesn't mean it has to be 30. It could be more frequently as necessary when there's updates or changes. every time a status report is submitted, we ask that the adjuster carefully review the reserves and address reserves on the status reports. So we want to make sure that we're getting those reserves updated as quickly as possible, as frequently as possible, and to keep them accurate during the claim process. This is particularly important with commercial policies, which have very large reserves and can have significant fluctuations. We want to remind adjusters when you're issuing or stating what the reserves are, you do not have to deduct any advance payments. We'll do that automatically in our system. So the reserve should be based on what the damages are expected to be, and then we'll make any deductions for any advances that have been issued up to that point. So the final report itself, we're going to dissect it a little bit here. I'm going to try to go through some of these a little bit quicker. I know that we want to have time for questions and stuff, and I still have a few slides to go. So the final report, we're just going to touch on the narrative. One of the big things that we've been seeing lately, documenting the GCF, particularly with virtual inspections, quick things on the proof of loss, the building diagram, the estimates and photos. So not enough can be said about the narrative here, so it actually takes up a few slides. The examiner did not see what the adjuster saw. The examiner did not hear what the adjuster heard. We don't know what the adjuster or the policyholder said. And frankly, less pleasant, but we did not smell whatever you smelled. Please explain it. Please explain it in as much detail as necessary and relevant to explain to us what happened, what transpired. We do occasionally see narratives wherein the language and the responses appear to be what's usually called canned language. It's just kind of recycled, or it's a template that's used on every report. We want to try to avoid that. Sometimes it leads to incorrect information, most often incorrect lien holders. And recommendations for close without payment, which are unclear and a little confusing. So be specific on really everything, but some of the things that we really are looking for more specificity on is who did the adjuster meet with, what is their name and title, who occupies the risk, how is it verified, summarize attached documentation, particularly with commercial properties. There's nothing better than you have a claim and you have 300 pages of leases and ownership attached and no explanation. So if the adjuster is meeting with the policyholder, particularly in complicated ownership situations, some conversation has taken place that prompted you to provide this documentation. Explain it for us. Summarize what's attached. There's a lease for this, there's ownership for that. My interpretation is this is who owns it, this is who occupies it, and this is why I sent what I sent. Things like were appliances damaged, et cetera, especially when we have a lower water line, just throwing that out there in the narrative. It does not mean that narratives have to be particularly long. You don't have to list every single thing that's covered or not covered or what you did or didn't do, but we want to hit on that relevant stuff that, particularly the conversations that transpire with the policyholder. When the policy is in the name of a business and the narrative states, met with Joe's Auto. Well, that's not a person. So who'd you actually meet with? That kind of thing. In the narrative, you want to address any discrepancies between the known policy information and the information provided by the policyholder. Be clear and specific and include proper and relevant details. Summarize the findings, conversations with the policyholders and their representatives, and be clear on denials. On some of the final reports we've been seeing, we can't quite tell what the recommendation is for on CWAPs. I would say CNC actually does a great job on this. We typically don't see this with you guys, but we're just going to remind it. What we typically see on CNC reports is that header, like you see in that example below, which specifically tells us what CWAP we're looking at. But we still want the remainder of the narrative, particularly the section on the origin of flood, to be clear and relevant and consistent with the preliminary report as well. This is something new that, new-ish, that FEMA has really been kind of driving. So we want to make sure that it's known. If you could please, in your narrative, indicate if there is sensitive documentation in the claim file. This is personal information, sensitive information, like dates of birth, account numbers, social security numbers, things like that. Documents that may have that include driver's license, death certificates, divorce decrees, bank statements, etc. If you have to include these documents to document a claim file, which is certainly possible, try to only have one copy of it because when we have to send these claim files, whether it's to attorneys or to FEMA, we have to redact this information. So it's helpful for us if we get the heads up, hey, it's in the file just so you know, and if it can be included as few times as possible so we don't have to redact multiple documents over and over again. Again, kind of a new thing that FEMA's been putting some focus on, and certainly we want to adhere to that. So we want to make sure if there's sensitive information in the claim file that we are treating it properly and redacting it when necessary. All right, documenting a GCF. Again, this is a big issue lately, particularly with virtual inspections, photos, photos, photos. The photos provided in the claim file need to clearly document the exterior and interior water heights. I think we all know that and support the GCF. What we're seeing often is that it's good at documenting there was water in the house, but not necessarily outside of it, or not necessarily covering 2 or more acres or 2 or more properties. This is a photo that we often see with the caption that you see here. So it's a clip on a wall. I don't see a water line. And the caption said the policyholder states this was the water height. Unfortunately, that's not very helpful. The policyholder could state the water height was 15 feet tall too. That doesn't mean that it actually is. So the photos need to actually support the statement. So please don't do that. The proof of loss. Actually seeing a couple of these lately, but please check and verify that the proof of loss is signed and dated. It does have to be both. And the date actually has to be valid, not a future date or a date that's before the proof of, or the date of loss and things like that. Electronic signatures, it's absolutely fantastic that we're able to accept these now. But while we can accept them, we need to verify that it's actually an electronic signature. So I know that you guys use some software program that allows them, to kind of on a tablet, they're signing on the advance payments as well as the proofs of loss. So that's fantastic. You're doing it old school and you're doing an electronic signature. When a document is electronically signed, there's usually a little ribbon on the bottom that tells us it was DocuSigned or some other software program. That's an example. It includes a little ribbon at the bottom verifying its authenticity, that it was in fact electronically signed. If the person signing the proof of loss is anyone other than the named insured, and if the named insured is not a person, then the narrative should verify who signed the proof of loss and the title or relationship of that person to the policyholder, particularly with signatures. We can't read signatures all the time. So who signed the proof of loss, and particularly if it's commercial, we want to know what their name is and what their title is. The building diagram, this is best practices. Please include a diagram which shows all of the individual rooms and measurements. We sometimes will get those, which for us that's not best practice. We want to make sure that the actual rooms are listed in the diagram because it's hard for us to determine where the openings are, where the doors are, how many doors there were, how many closets there were, or if we're missing rooms, if all the rooms have been captured, if we don't know what the rooms are. Including both, which is what we often see, is also correct and appreciated. And please make sure when you're using your diagram, whatever you name the rooms in the diagram, to please consistently name them the same thing in the estimate so we can follow along. So not to read every single one of these verbatim because I am aware of time, but these are the sort of the common things that we find in building estimates. Just want you to be aware of them. I do want to get into the general property section here for other insurance other insurance and insurable interest. It's a really important topic, but here's some of the things that we often see in the building estimate. Make sure that the quantities for removing and replacing items match. Verify the application of overhead and profit is correct. The claims manual has been updated a little bit here. So reminder that overhead is limited to 5% when the policyholder is facilitating the repairs. I have a spelling error there, sorry. Any deviation on overhead and profit should be called out and explained in the narrative. Anytime the policyholder is acting as their own general contractor should be called out in the narrative. We do have a note here. Craig and I talked about it a lot, I think last year too, on best practices for painting. It's one coat for the portion that's being replaced. Texture is allowed for the area being replaced, plus an allowance to blend, typically 1 foot, and then 1 full paint coat of paint for the full wall to blend. Any deviations from that, not saying they're not possible, certainly they're possible, but any deviations must be explained. Contents. The contents estimate is not a wish list. The contents estimate should be verified by the adjuster for pricing, quantities, verifying that not only the items were present in the building at the time of loss, but that they were actually damaged by flood and that they're photographed. We don't want to see lump sum allowances where the adjuster filled out their spreadsheet, or the policyholder filled out their little inventory and it's just a one-line item, contents. We want to make sure that we're listing those in the estimate so that we can apply appropriate depreciation, allow for cleaning whenever appropriate, and ask about salvage. Sales tax should be applied and it should be visible. And contents, whenever possible, should be organized in the estimate by the room that they were located in, particularly when you have areas with limited coverage. I'll leave it at that. And photos. Photos in the claim file and final should be sufficient, clear, and include relevant labels. The labeling of the photos is one of the things that we're seeing coming back in audits and things like that. We want to make sure that the label on the photo, the manual gives us specific instructions on what the labels on the photographs should have. It should provide the date, the room, and a description of what the photograph represents. All right, so try not to rush this too much, but general property and commercial claims, they require more extensive documentation. So we have to document insurable interest. Insurable interest is both ownership of the building and ownership of the contents, and they can be two separate things. Verification of leases, that needs to be addressed in every commercial claim. Verification of other insurance needs to be addressed in every commercial claim. Statements from landlords, building owners, and tenants may be necessary on claims. And for stock, proof of purchase pricing should be included to document stock and inventory. Let's talk about insurable interest. It is so important when investigating and adjusting the claim to understand the importance of determining insurable interest. The flood insurance manual does provide guidelines regarding how coverage is to be written when there is a tenant and a landlord, which is one of the most common things that we see. But the insurable interest of the various parties may be different for building and for contents, which can affect how coverage applies. The adjuster is responsible for documenting the insurable interest of the named policyholder and identifying any other parties of interest on a claim, or if we have multiple names listed, explaining what the differences might be or if they're the same. If there's a lien holder, identifying what the lien holder's interest is in, because it can vary. You can have insurable interest from a lien holder on contents. Perhaps, you know, Joe Schmo wanted to open a restaurant and had to borrow money to buy all of his tables and linens for the restaurant. So perhaps there's a mortgage company that has a loan on those things. To be clear, the standard flood insurance policy does list the policyholder's cooperation with this investigation as a requirement in case of loss. It is listed in the requirements in case of loss. So within 60 days after the loss, of course, but it states that they have to document their interest, for example, owner, and the interest, if any, of others in the damaged property. That has to be disclosed and that has to be documented. So, of course, there are varying circumstances when it comes to general property. You may have a policyholder, which we all pray for, that they are both the owner and the occupier, and they own both the building and the contents. That's beautiful and that's nice and clean. But there are also circumstances when the building owner is a landlord and they're leasing to a tenant, and those business interests differ. There are scenarios when the building owner is leasing the property to another business, and they also own that business, maybe under a different name, maybe not. And there are many variations of these combinations. So the important thing is to verify who the parties are, and identify who the parties are, and document the claim. I often, when I'm reviewing these, I start a synopsis and I have a little checklist of here's who all the players are. I need to verify, is there a lease, who the mortgage company is, who the borrower is, and I kind of work through my list and kind of unscramble when they're more complicated. To be clear, as far as at application time, as far as how the policy should be written, the NFIP manual states when it comes to tenants coverage that the tenants can purchase a contents coverage policy for their own personal property, right? And that they can use 10% of the contents coverage amount for betterments and improvements. It's important to know that because that's going to impact other insurance and the need to document other insurance. So tenants can purchase the policy for contents. Tenants can also purchase a policy for the building if it's required by a lease agreement. The policy has to include the name of the owner of the building. However, tenants may not purchase building coverage if the owner has another policy. We have to be careful about duplicate coverage. Residential condominium buildings are an exception, of course, to that condition. So it's important that the tenant can have a policy for the building, but it has to be a separate policy from their contents, and the policy for the building, if required by a lease for the tenant to carry it, must also list the landlord because they have an insurable interest. But regardless of the scenario, the adjuster should provide a detailed narrative explaining all of the information provided by the policyholder. When the adjuster is out there doing the inspection, or having any conversations with the policyholder during the claim process, it's assumed that these things are being discussed. Okay, so what's going on? Who owns it? Who occupies it? Do you have a tenant? and all these things are being discussed. That should all be outlined for us and summarized in the narrative, as well as a summary of the accompanying documentation, so that you've already done the work, so just please explain it for us so we know what we're looking at and why we're looking at it. The narrative should specifically state if there is or is not a lease. If there is a lease, a current copy of that should be included. The title and the name of the person that was present for the inspection should be included, so we know who you're dealing with, and the name of the title and party, again, of the person who signed the proof of loss. So I could go through a million examples of these, so I just gave a couple quick ones. So let's say Smith Partners, it's a made-up name, not a real one, owns a building and is listed on the deed. They also occupy the building and own all of the contents. The policy is in the name of Smith Partners and is for both building and contents. That's a beautiful, perfect scenario. We would still need to document things. We would still need a copy of some documentation to verify that they own the building. Typically, that's a copy of the deed or tax documents. We would still need a statement from Smith Partners stating that they occupy the building and there are no tenants and no leases, and that they own the contents. Maybe some copies of receipts or invoices for contents or stock invoiced to Smith Partners would help to document that as well. In addition to that, and I forgot to notate it, but we would also need a statement from Smith Partners regarding other insurance. Do they have other insurance which covers this building? Another example here, we've got Smith Partners again owning the building, but Jones Accounting occupies the building as a tenant and owns all of the contents. They have a triple net lease with the landlord. A triple net lease means that they are required to pay rent, taxes, and insurance. The policy is in the name of Jones Accounting and is for building coverage only. Again, these are pretty clean scenarios, but this is an example of a tenant carrying the building coverage because of a triple net lease. But note, only the tenant is listed on the policy. So what documentations might we need to document this claim? We're still going to need a copy of the deed or tax documents showing that Smith Partners owns the building. We would need a copy of the current triple net lease, which documents the insurable interest of Jones Accounting Inc. in the building. We would also need a statement from Smith Partners, the actual owner of the building, verifying if they do or do not carry an insurance policy which covers flood. Again, we can't have duplicate coverage. In this example, the owner of the building, Smith Partners, is going to have to be added to both the policy and the check. We're going to need statements from both parties regarding other insurance as well. So the claims manual does give specific information regarding the need to document other insurance. So there's a section in the policy, of course, that outlines what to do in the case of other insurance and how to apply those. But more specifically, as far as the need to document it, it's always been in there that the policyholder is required to provide us details of any insurance that may cover the loss. And again, any other insurance that's not specific to the NFIP. In addition to that, our options after a loss, we are allowed to ask for and make extracts and copies of policies of property insurance, insuring you against a loss, and deeds establishing ownership of the property. So again, it's all in the manual that allows us to ask for these things and actually requires the policyholder to provide them. If either party has another policy which potentially covers flood, or if they have another policy which does not cover flood, we're typically asking for a copy of that policy. We just need usually the deck page and the part of the policy that shows the flood exclusion or specifically states that the policy is excess, or if there is no policy, then a statement stating there is no policy. Now, if you have a $500 million casino building and they tell us we have no other insurance, I don't believe that. That's probably not possible. If it's a small mom and pop store, a little gas station, a little church, a detached garage, they probably don't. So common sense has to be applied there as well. If it's one of those scenarios of a very small building or, very small property in general, it's under 100,000 or something like that, for example, and they fill out the flood field survey or questionnaire and they say, I don't have any other insurance which covers flood, that's probably going to suffice. Has to be called out in the narrative that it's addressed and where it's documented. Larger commercial policies, they always have other insurance, or almost always. So we need copies of those policies showing that it's excess or that it's excluded, etc. Remember, this is all because the SFIP does not allow duplicate coverage. So both the landlord and the tenant could potentially carry their own insurance. So if you consider a building in the name of the building owner and the building is tenant occupied, if the tenant carries their own policy for contents, that could include betterments and improvements. So we could have overlapping coverage there. So in that scenario, we would need to know if the tenant's carrying insurance. Is it carrying their betterments and improvements? Have they filed a claim? Are they getting paid for it? We need to rule all of those things out. So again, the adjuster should be addressing that in their narrative and provide the supporting documentation one way or the other. So what we often see are these statements: I do not carry a flood policy for this building. That's not what we're really asking. We need it to be specific. I do not carry an insurance policy for this building that covers flood. That's more specific. It's not limited to a flood policy. So real quick, there's a couple more things here. So best practices for contents in stock and for commercial claims in general. So large, big ticket items, you've got a $50,000 walk-in freezer, a $200,000 elevator, a $60,000 boiler. I've had them. In those cases, we don't really want to rely on estimating software. In those cases, for commercial losses, again, those big ticket items, sometimes even cleanup, we really want to get actual estimates from the parties who are going to be doing the repairs and the replacements. We can have significant differences between what the estimating software is saying versus what an actual local technician would charge. So in those cases, we don't want to see big ticketed items estimated. We want to see those actually or estimated in the system as software, but actually estimated by local contractors or service technicians who are going to be doing the work. We need to have purchase pricing documentation for stock and inventory. And the adjuster should pay special attention to make sure that on the invoice and receipt itself, it's actually billed to the person that we've determined has the insurable interest. If there's a discrepancy, we may have to dig deeper. A common error on these is duplication on sales tax. Either sales tax wasn't charged, so we shouldn't be charging it because it's not an incurred cost, or it was charged on the invoice and then we're going to charge it again. So we don't want to be doing that. Quick reminder on mobile homes, just a couple slides left. So for mobile homes, the adjuster is required to include a NADA or equivalent. It has been ruled out and verified that the Xactimate valuation of a mobile home is not a replacement for a NADA. It has to be a NADA, the policy states, or equivalent. I'm not aware of an equivalent for a NADA, so really it's just a NADA. And the NFIP mobile home worksheet. And then just a reminder, when we're valuing the mobile home, the value of the mobile home should include all of those items, including the cost to disconnect and reconnect the utility, transportation, the cost to remove the damaged home, as well as setup and delivery of the mobile home itself. And then RCBAP. RCBAPs aren't quite as complicated when it comes to commercial properties as far as verifying insurable interest, but we still have to verify that it's a condominium form of ownership, that the condominium name is correct. We have to verify other insurance for that as well. But again, the policy allows us to ask for that, our options after a loss. It tells us what documents we need to verify the condominium form of ownership. Condominium association documents, including the declaration of the condominium, its articles of association or corporation, bylaws, rules, etc. All right, so the life cycle of a claim, as we stated earlier, does not end when the base claim is closed. The claim can have an extended life. It can go on forever. Again, think Sandy Task Force. For anybody who's been around for Sandy, it's still going. But of course, re-inspections, RAPs, ICCs, appeals, DOI congressional inquiries, appraisals, litigation. Litigation. It is important and helpful to remember that every file can go to litigation. Every adjuster can be deposed. Treat every claim with that in mind. The file should always be able to stand on its own. So what can you do? Everything that we've just talked about. Be thorough and provide supporting documentation. Know the flood policy. But in summary, the most important things the adjuster can do, and the examiner supporting them, is to document the claim. Take good photos. Apply the rules of the policy, know the rules of the policy, and explain anything which needs explaining. Tell me a story, I love stories, in the narrative. It's very, very important. Not much time to spare. Sorry.
Okay, so we do have a couple of questions, one of which I believe you answered earlier, but I'm going to ask again just in case someone's internet went out or anything. They said during the reauthorization webinar this year, NFIP said they do not want a copy of the driver's license in the file. Privacy concerns. Has that changed?
I didn't receive that notification. It's simply they don't want it in the claim file when it's sent on. So we have to redact that information. It is a document that can be used to verify principal residence. It tells us that in the manual. So we can ask for it, we can have it, but we need to know if it's in there, and we want to limit the number of times it's repeated in the file, and we do have to apply some special handling to redact that once it has been received. So if we were forwarding it on to an attorney, sending it on to FEMA, we have to redact it. So that might be what they meant as far as we have to redact that information once it's received.
Right. Okay. Here's one that I have been asked many times, and I've actually asked. So in regards to a GP policy, a GP, shouldn't the policyholder be required by the WIO to submit all documentation required for a payable claim at the time of purchase and for renewal?
Okay. So great question. Certainly one that's been asked on my end as well a lot of times. So number one, as far as documentation required on an application, it's actually FEMA's rules and regulations. So I can't really answer for FEMA specifically as far as why they do or don't do something. It's not quite my question to answer. But what I will say is that information changes. So if you have a policy that was written, and certainly some of our policies have been in place since the 90s or longer, information changes. Whether the application was submitted yesterday or 20 years ago, it is still the adjuster's job to document the claim, to document insurable interest, make sure nothing's changed, and that all that information is still correct.
Okay. And okay, that's all I have. And I believe Craig's going to take over, and he may open up the mic for Wendy.
Wendy has a few questions, and I'll let her just ask them. So let me scroll down to her. I'll let her ask these questions. Wendy, you should be able to talk now.
Hi, Wendy.
Hi, Jessica. Fantastic presentation. I have to say, I have pages of notes. So, but I've got
You want to
three.
schedule a meeting?
Yeah. No, I have three questions I think might be good to sort of touch on. One is the person who just asked the question about the driver's license. You mentioned that you would like to see some type of sensitive information alert, so that you're aware that there may be documents to be redacted. If we put that in at the header or the top of our narrative, you clipped an image of what our narratives look like. If we put something like a little red box that says sensitive information alert on page 1, would that be enough, or how do you want
That would be perfect. And
Okay.
our Sarah Brandeberry, Dr. Brandeberry, who pulls our files for audits and litigation, would love you forever.
Okay, we'll work on a draft so that we can put that out there for you. Second question. The extended life of a claim includes wraps, like you mentioned. And when you were talking about reserves and keeping reserves updated during the life of the claim, when you open a wrap and set a reserve, do you want the reserve to reflect the entire claim, including the original, or just a new reserve for the new potential payments?
So that would be the new reserve for the new potential payments.
Okay.
So once the claim is closed, whether with or without payment, the reserves are brought down to 0. So any new payment would be new reserves. So we'd be starting clean from that point.
Okay, and so something that does come up on that issue a lot is that policyholder will say, we want to claim additional damages, but we may not have anything to quantify what those are yet. Or maybe we're opening the file because an engineer is inspecting for potential structural issues. We won't know whether there's going to be any possible payment for a while. So if we leave it at 0 until that documentation becomes available and then change it later, that's okay, right?
Well, in our internal procedure, what we do on our end, we actually don't even open the reserves until we're basically ready to make a payment.
Okay.
When it comes to additional payments, the extended life of a claim, it's sometimes shameful to limit it to one slide because I actually have an entirely separate presentation for just the extended life of a claim.
I would love to see that. But so it's okay for us to hold back on a reserve. We don't want to take a guess until we're sure.
Right. The reserving as far as, every status report kind of thing, more for base claims, because we're constantly reporting those changes to FEMA. When it comes to requests for additional payment, I mean, if you have reserves and you can ballpark it confidently, fine. But we really don't open them and set the reserves until we're actually ready and fairly confident we'll be making a payment.
Good. That's good to know. Last question is regarding underwriting alerts. Obviously, when we have an underwriting alert, it may cause us to have to pause. We can't complete the claim until we know the outcome. And a great example, I think, for my question is if the policy is rated with no basement and the adjuster determines that there is a basement, obviously that's potentially going to change premium, but also limit coverage. My question is, If we know that to be the case, do you prefer if we go ahead and write the claim with the limitations applied to try and resolve at least what we know we owe, and then maybe open it up for a wrap later if we determine there is no basement? Or should we wait until the underwriting is fully completed?
I would say to proceed with basement limitations. The only disclaimer I would put on that is if we are going to essentially overturn how the policy is rated, it was a slab, but oh golly, look, it's a subgrade crawl space or a basement. It should be very, very well documented. I mean, underwriting alerts happen very frequently, of course. There's often changes, number of floors, it's elevated, but it's actually subgrade crawl. I mean, they're fairly frequent. It's those big ones in particular, especially changing from a slab to a basement or, a slab to elevated. If the photos present it and it's incontrovertible, definitely proceed. If it's dicey and we're really not sure, I guess that would be a different approach.
Right. When
we know it's a basement, looks like a basement, quacks like a basement, that kind of thing, then proceed like it's a basement.
Right. We just want to make sure that if we have an opportunity to pay the undisputed amount or make a recommendation for that, we want to. A lot of times, though, if there's going to be a big hit to the policyholder, they don't agree, won't sign a proof of loss, and we're not going to resolve anyway. But you're in agreement that if we can get a signed proof of loss on the undisputed amount, we should always be moving forward with that as early as possible.
Right. We don't want ball in our court. We're waiting. If there's money on the table that we can possibly provide to the policyholder to kind of keep things moving. Again, I would kind of say those have to be divided into two different categories. One where it's just absolutely obvious and there's no, whether the policyholder likes it or not, we absolutely know it's a basement. So we would proceed with basement limitations. Again, if it's one of those really sticky, we really can't even tell, that would be a different path to take.
Okay. We probably should have our own private meeting because I could ask questions all day long.
Right.
But I think that
time.
I think those are the biggest ones I think that will give guidance out there to the listener. So I appreciate it again. You did a great job. Thanks.
My pleasure.
Right. Jessica, we have one more in the box. It says, is the 360 valuation acceptable? This is a third-party valuation that is through Xactimate online version only.
So in the adjuster training that we had most recently, the annual training, they did specifically, in the version that I had, state that the Xactimate valuation does not work. It's NADA or equivalent. Our internal procedure is typically, we have yet to see anything that is the equivalent of a NADA, and we typically just ask for the NADA.
All right, thank you. I will say goodbye to you and talk to you another time, and Craig is going to end this for us.
Okay. Yeah. First of all, I want to know when Dwayne is actually starting his modeling career. Because, when you look at that picture, he was, to the side, he had his arm out. He was looking at you funny. So I'm just curious when he's going to start his modeling career. So I just need to ask him. So, but yeah, he's definitely, that's definitely one of those, what was the place in the mall that used to take pictures? I'm showing my age. Never mind. So, all right. Anyway, we just want to say thank you very much for basically for your time, your expertise on this subject, covering this information. I know it's always valuable to hear another perspective, to hear the other side of the fence, if you want to say, to see what you all go through in a lot of cases, and really the value of what, as an adjuster, we make sure we're doing to properly document that file to make that file work for you. Oh, somebody just posted down there in the chat box, glamour shots. Yeah, it's glamour.
Glamour shots. Yeah.
But to really properly document and record everything and make sure where it's all in order, and so that information is, when it gets to you all, when it gets to the examiner, to y'all's desk, the information is accurate and right. And so we always like to have these conversations and hear this, because sometimes we get lost in the weeds with stuff and we do stuff a certain way, and you hear stories about how to do it one way, and then you find out, oh, you've been doing it the wrong way. And that's the reason we put these together, these Flood News at Noon, for that purpose, is to get these messages out, to get this information out. And sometimes it may be stuff that we're familiar with, but it's other times where we pick up something new every time you hear it. And the way I look at the training, if we're always learning, we're always developing, we're always growing. There was a quote out there that I always follow, the minute that you're not learning, I believe you're dead. And that's like a Jack Nicholson quote. And it is the truth, because the way it's the way the program is always evolving. You know, the claims manual is always changing. Somebody's always interpreting the coverage differently. So it's always good to hear from an expert in the flood industry to give us some insight into what you all see and why you see it, and what we need to, in order to put those practices into place to make sure that information is coming across and we're getting that just a clean package out for everybody. Basically, what it comes down to it. So,
yeah, and so
again,
much of it really does boil down to the narrative. And I apologize, because actually I wanted to preface this entire conversation with how much I enjoy working with you guys and how much this is us as a partnership. And I always want that to come across. It's never us against them, or it's really over the years have so enjoyed working with adjusting firms and meeting different people from different places and working together and all working towards that same purpose. So always a pleasure, and certainly glad
it's definitely a partnership. I mean, we can't do it without y'all. Y'all can't do it without us. I mean, we work together. It's a team. And sometimes you may call and say, "What are you doing? Why are you doing this?" And I don't take that wrong. I mean, I take that as criticism, constructive criticism, to just, okay, there's opportunities. We know there's opportunities out there to be better. No matter, at the end of the day, what can we do to make the process better, faster, easier, and cleaner for everybody across the board? Even when it comes down to the policyholder. If we're doing a better product, at the end of the day, they're getting a better service, and that's what ultimately what it comes down to. So we see it. I do have a question though. You have a picture on there of Nick Saban with his head down, and we're talking about the non-waiver. It's head down. When I looked at that, and because when I see a non-waiver come across that just says late reporting, my first reaction is to take my headset off and throw it on the ground and start cussing like he does. So so that was just an embarrassment, and I could see that, but at the same time I could see it in his fit of rage. So, but I'm glad you threw the Alabama reference in there. That was
told you I got one Alabama reference, one Star Wars reference, and then I cut myself off.
Then you're good. So, but again, thank you. Thanks for being on here. And